Hi friends, welcome to Konexio Technical Insights. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns on Nifty, Bank Nifty as well as on the different asset classes. Now first of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that due to a truncated week because of uh, Diwali, we had only hardly three trading sessions. Market would remain positive. Any dip should be used as a buying opportunity, and market behaved in expected lines. But now let us go to what we have discussed a couple of weeks back. Let us go to the international markets, which we have discussed earlier, maybe 4 to 5 weeks earlier. So first of all, let us discuss what we have observed on CBOE weeks 4 weeks earlier, and what we have predicted those point of time. Now let me go to the CBOE weeks, so we can have a clear view about what we have expected during 4 to 5 weeks earlier. Now this is the international weeks of the US markets. We have been discussing regarding this particular multiple resistance trend line, which have been maintained since January 2022. Multiple times this has tested upper resistance line and it has corrected. And whenever it has tested and corrected, international markets, specifically the US market, has corrected sharply. On this day, round about maybe on 29th or in the end of the September, we have been discussing that the CBOE VIX is nearing its resistance line, and we might see a sharp correction in CBOE VIX, which might pull Dow Jones higher from the lower levels. And from those levels, we have seen a sharp recovery in the Dow Jones from that particular oversold territory. Now let us see the international market first. How Dow Jones have behaved in that particular set. This was the area. Look at the cursor where we have been discussing regarding the CBOE weeks. This was the cursor when we have, even you can check the thumbnail of our videos. We have discussed that are these global markets bottoming out and are they prepared to rally from these levels. This was the thumbnail which we have mentioned in our report in our videos couple of weeks back, and exactly it has made a double bottom in Dow Jones, and you can see almost Dow Jones has rallied almost 10% from those particular oversold region, and we have been bullish. We have taken a strong contrarian view where globally everybody was bearish that Dow Jones might correct 20-30% from these levels, and we were discussing that this is not a bear market in Dow Jones or in the international market. It is just a sign of a time correction, and from those levels we can see that Dow Jones has rallied almost 10% from those particular areas. Now let us see what we have seen in index, the German index. Index also you will see we have also discussed those area. This was the area where we have been discussing that this could be the bottom, or it could start a process of making a bottoming process at these levels. Even you can see the Dow German index has rallied almost 10% from those particular area. It was quoting around 11,800 and currently it has closed around 13,250. Let us go to the CAC, the France index. Similarly, what we have expected, it has performed on a similar line. CAC, it was quoting around 5,600. It has rallied till 6,000, almost 6,300. This is almost most probably 10% rally from those particular lower levels. Let us go to the FTSE. FTSE 100 index has also rallied from the levels of 6,700 to 7,000, almost 7,100. So most probably what we have expected near those area, that the global market might rally sharply, and in next 10 to 12 months from that particular date which we have been discussing, we might see Dow Jones and even the European markets might cross their all-time high in next 10 to 12 months. And we have been bullish on our markets also, and we have already been advocating that our markets are poised to break out the lifetime highs. Maybe it will take some time because the global uncertainties, the geopolitics, the daily changing geopolitics. It will take some time, but definitely Indian markets are poised to break its all-time high. Now let us discuss what we have uh, discussed on India weeks. In India weeks also we have been discussing since last couple of weeks. India VIX was forming a triangular formation. Let me draw that particular so that we will have a clear view. This was the triangle which we have been discussed couple of weeks back, and look at that particular. Now it is a breakout. We have discussed around this mark, and we had expected around 22, and we have advocated that India VIX might test the level of 16. It has almost tested 16 mark and it has pierced in that. So we feel that from here onwards also India VIX might drift. We might see some sort of bounce back, but that will not be sustained. We feel that again India VIX might slowly and gradually start drifting from these levels and might test the levels of maybe 11 or 10 in next 6 to 8 months. So definitely looking at this particular pattern, we feel that Indian markets are also poised to give a breakout of its lifetime high. So now let us go to the Nifty and discuss what could be the trend for the next week. This is the rising channel which we have been discussing since last couple of months, since June 2022. Currently, Nifty is at its midway. You can see it has consolidated in the last week and it is just poised to break out from the levels of 17,900. So definitely the primary trend is positive and we might see a breakout. Now most probably if you see Dow Jones on Friday has rallied almost more than 700 to 800 points. So on Monday we might see a huge gap up. Maybe Nifty might open above 18,000 mark. So after opening gap up, we might see some sort of profit booking or some sort of intraday correction. But that intraday correction should be used as a buying opportunity in Nifty. So now let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed at 17,637 is the first support. Then second support in the Nifty is placed at 17,472. Third support in the Nifty is placed at 17,311. On the upside, the first resistance is placed at 17,909. Second resistance is at 18,096. And third resistance is around 18,188. So these are the important supports and resistance level in Nifty. Traders should try to follow these levels and just trade in the direction of the primary trend. Now let us discuss what we have observed on Bank Nifty daily charts. On Bank Nifty daily charts, you will see a similar kind of pattern has been formed, and we have been discussing this particular rising channel since last couple of months. It has been moving in this channel, making higher tops, higher bottoms. Currently, Bank Nifty is on a verge of a lifetime high breakout. Lifetime high is almost around 41,850 odd marks. So definitely, as I said, the primary trend is positive. Bank Nifty is on the halfway of this particular rising channel. The rising channel can take Bank Nifty towards the level of almost 43,000. RSI is also into comfort zone, and as most probably as I indicated, the Dow Jones has also ended on a positive note. So on Monday we might see a positive gap up opening in Bank Nifty also. On intraday basis, we might see some sort of cool off, but that cool off should be used as a buying opportunity. So overall, looking at CBOE VIX, India VIX, US markets, European markets, Nifty and Bank Nifty, the trend and the market view remains to be bullish. Strategy should be buy on dips. Now let us discuss what we have observed as the support and resistance level in Bank Nifty. On Bank Nifty, the first support is placed at 40,643. Second support is placed at 40,355, and third support is placed at 39,848. On the upside, the resistance is placed at 41,201. Above that, the second resistance is placed at 41,530, and third resistance is placed at 41,829. So these are the important supports and resistance level in Bank Nifty. And as I said, buy on dips should be the strategy. Now, friends, let us come to the third segment of our show, which is option analysis. In option analysis, we'll try to figure out or we'll try to study the option data of Nifty, Bank Nifty calls and puts, and we'll try to analyze what could be, the upper band and the lower band in both the indices. Now you will see on the screen that what we have observed in Nifty calls. In Nifty calls, the action was seen in 17,900 calls, 18,000 calls, 18,100 calls, and 18,200 calls. Here you can see there has been a rise in the volumes, rise in the open interest. Implied volatility is in comfort zone. It is between 11.73 and 12.50. Percentage change is almost flat. So looking at this particular pattern, we feel that uh, the smart money might be slightly having a wait and watch approach, because next week uh, is an important week, because of we have FOMC meet. Again, we have RBI's MPC meet. Already, the central bank, I mean to say, the European Central Bank has raised the interest rate by 75 basis points. So, what could be the indication from the US central banks as well as the Indian central banks? So, maybe the traders might be waiting for that particular cue. But looking at this particular trend, we feel that any dips should be used as a buying opportunity. Now, let us see what we have observed in Nifty puts. You will see on the screen in Nifty puts, the action was seen in 17,700 puts, 17,600 puts, 17,500 puts, and 17,400 puts. Now, here you can see there has been rise in the open interest, rise in volumes, drop in option premium. Implied volatility is a comfort zone. It is between 15.202 to 15.71. Here, slightly, we have seen a drop in the Nifty puts. So maybe traders might be looking out for either a consolidation, or they might be thinking that Nifty might trade with sideways to positive bias. There has been a small writing seen in this, I mean to say, small indication of put writing might be seen in this particular data. But obviously, we have to wait and watch. And looking at the international markets, we feel that if there is a huge gap up opening, then definitely the smart money might start writing puts aggressively, because uh, they might be making a call, or they might be taking a market position that market might blow out from above 18,000 marks, 18,100 to 18,200 mark in next couple of weeks, or definitely at least above 18,000 for the next week. Now let us observe the data of Bank Nifty calls. You will see on the screen that action was seen in 41,200 calls, 41,500 calls, and 42,000 calls. Now here you can see there has been the significant drop in option premium. Then there has been a rise in the implied volatility. It is between 18.89 to 19.10. Volumes are also rising, and open interest is also rising. But the most important part is significant drop in option premium and a sharp rise in implied volatility. This means that traders might, as I said, traders might be watching for some sort of cues from international or global central banks as well as the Indian central bank. So they might be thinking about that on the upside, 41,500 could be the major resistance because you can see the major part of the volume has been concentrated around 41,500. So if it breaks, then we might see 42,000 on the upside. But looking at this particular data, we feel that they might have started writing out of the money calls in Bank Nifty. But most probably, you can see the US markets are highly positive. So we might see the option writers, I mean to say the call writers might start cutting their short positions or just uh, booking their profits or cutting their short positions in while writing these Bank Nifty calls. So definitely the view remains to be bullish on charts, but on option data we might see a short covering in the Bank Nifty uh, call writing. So definitely the trend remains to be positive. Now let us see what we have observed in Bank Nifty puts. In Bank Nifty puts, you can see there has been a rise in volumes, rise in the open interest, rise in the implied volatility, and rise in the option premium. The rise in the option premiums are not that much significant, so they might be thinking that because of this FOMC meet and RBI meet, the market might consolidate time wise. It might move sideways to positive or flat. But looking at the international markets, we might see a huge rally. So this particular buyers might start writing the Bank Nifty puts. So that we have to see the data on Monday. But looking at this particular charts and other data, we feel that strategy should be buy on dips. Any gap up opening should be used to book profit those who are long. Wait for some pullback and try to create long positions or build up long positions at the lower levels. So friends, this was the data with what we have observed, and looking at this overall data of charts and option data, we have a view that on the indices the view should be bullish. Any dips should be used as a buying opportunity. Now let us come to the final segment of our show, which is positional call. I have identified one stock. The name of the stock is UPL. The stock has been moving positive, showing some sort of strength at these levels. The stock was into a correction mode. It was moving nowhere. It was consolidating in a very broad range. Now here you can see the stock has formed a small inverse head and shoulder. This is the left shoulder. You can see the cursor where I am putting. This is the head and this is the right shoulder in the making. Stock is still on the verge of a breakout. Volumes are rising on the right shoulder, which means that the stock is well poised for a huge rally in the long run from these particular levels. Stock is currently quoting at 714. Long-term investors, positional traders, or positional investors can buy the stock at current levels, which is 714, and on dips to 696 for an upside target of 805 in long run. So definitely this inverse head and shoulder pattern, this is the blue neckline. The neckline breakout would be about 725. Right shoulders are showing huge building up of volumes. RSI is also in a positive territory. So definitely one should buy this stock, invest it. Even if those who want to invest for short term, they might get a target of 755. But definitely for long term, the stock has potential to test the levels of 805. So definitely investors can buy the stock in the range of 714 to 696 for an upside target of 805 for long term. So as I said, again I would like to conclude before concluding I would like to say next week is an important week. There is FOMC meeting, there is RBI meeting. Market might show huge volatility, but looking at to the charts, we feel primary trend is positive and any dips should be used as a buying opportunity. So friends, let us conclude the video. Thank you for watching. Any comment you can give into comments box. Have a nice trading week. Thank you.